Hello fellow option traders, this is Jeff and welcome to my update for Friday, March 4th, 2016. Okay, well, as you all know, this has been a very good week for the market, but before we go into it, that is if you're bullish. But before we go into that, today's announcements, the employment situation, the number came in, well, pretty good. You know, it's a number, whether you want to believe it or not, it's a number that people hang their hat on. International trade, though, came in with a deficit, increased deficit in the trade deficit, I guess you could say. I'd say deficit one more time. And this week, a lot of the news was on the negative side, with a few positives or in line, I guess you might say, or as expected. So pretty much it's negative or as expected, as forecasted, whether the forecast was good or bad. And in a lot of cases it was bad. So anyway, I think that's enough as far as the economic announcements are concerned. If we were to take a look at the market, just looking at Russell for this week, 1, 2, 3, 4 days. You only have 4 trading days this week. So it's been looking pretty positive and very strong, actually. And I'm in trouble here. And that's part of the reason why I wanted to put this video together. And in addition, my GLD position, the covered call there, is also getting pretty deep in the money, and we'll take a look at that and see if we want to do a roll on that one again. Some other things, though, are looking pretty good. Let's take a look, for instance, at the Dow. Dow this week, looking very good. At a big day Monday. Let's zoom in just a little bit here. Had a big day Monday, and actually we do have 5 days this week. Just wasn't showing up well at that zoom level. But this level we do have the 5 days. And a little bit of a pullback later on in the day today, but not too bad. Are we in a new bull run? Well, it certainly does appear that way. I'm not going to deny it. So there's not much I can do about that. SPX, we'll take a look at that. Looking pretty much the same way. Not very good Monday, but the rest of the week, Tuesday was a biggie and continuing. Are we going to hit the 20-month moving average here, and what's going to happen when we get there? I don't know. NDX, we'll look at the Nasdaq. Probably pretty much same story, although Nasdaq's been a little flaky and not really participating with the rest of the market here, as you can see. Definitely looks a little tired out. Having problems with the 20-month moving average right here. So we're just going to have to see how that works out. And then we already looked at the RUT, but we'll take a look at that again. And while we're waiting for that to show up here, I have another different microphone. I dug out my old analog microphone. Wasn't happy with the new one that I got. And I'm not happy with the one that I got a couple of years ago. So this one, probably was using it when I first started making videos 4 or 5 years ago. And it does have, I don't have to turn the volume up, or the record level way up like I had to with the other microphones. Maybe it's a characteristic of being a USB microphone, whereas this one is an analog. Just plug the old analog plug into the side of laptop here, and I think it's going to work out a little bit better. Alright, so this is the Russell. No looking back here. Not quite up to the 20-month moving average, but this is where my short is here at 1100, so that's got me concerned. So we're going to take a look at what kind of options we have on our options there. Let's jump right over to the Analyze tab, and this is where we are right now with all these positions. I have 3 credit spreads at 1100 and 1120. So my short's at 1100 and my long is at 1120. Now I'm probably going to want to think about rolling that up or doing a credit spread on the put side, thinking that this is going to continue up. But I'm not going to do anything today because let me tell you, if you've been watching me for a while, I've been whiplashed to death under situations like this. And I have lost a lot of money bailing, just plain old, you know what, I'm going to take my losses and get out here and I'm going to take a $2,200 write-off. I don't think so. I'm not going to do that this time. I'm going to wait to see what happens over the weekend. You know how long weekends are, and you know all the crap that's happening out in the world, not only in other countries, but here in the U.S. with the presidential race. Oh man, I'll tell you, it's like a bunch of teenage boys up there arguing. It's pretty unrealistic, unbelievable. But this is where we're at with this. So now I'm going to take a look at maybe, let's see here. I want to see what it's going to look like if we roll one of these. So I'm going to right click or left click that one and then press down the control key and left click that one. And I'm going to say Analyze rolling the trade. Not sure exactly what I'm going to roll it to yet, but let's take a look at it. All right, and I just want to see what this number is going to be down here. I know it's going to probably cost me some money to do this, so I'm prepared to do that. So show all, I'm going to say hide positions. Because all I want to look at is this. So I don't want to move it out in expiration. I want to keep the same expiration. So let's go to April. And I'm probably going to, let's see here, where is my 10 delta right now on the call side? I'm going to move this over here, collapse that. All right. 10 delta on the call side is right here at 1160. So if I go down here and say I want to make this 1160 and make this one 1180. So this is going to cost 608. Wait a minute, that's not right. I'm going to do these as separate. I'm sorry, it's too confusing. I'm going to do this as separate. All right, let's bring these back here. First of all, I'm going to go to one account. That'll help. And then I'm going to show all. And here's the one. So I'm going to, let's see, I'm going to close this. Analyze closing trade. So it's going to cost $810 to get out of this trade. And then we get back in here at 1160. Analyze sell the vertical. And we'll make that 1180. Okay, so this is going to cost a big time if I do this. I was hoping maybe it wouldn't be quite like that. Do you think that maybe I might be better off doing something maybe like 1140 or so? Let's take it 1140, 1160. All right, that would keep me down to about, it's going to cost me $300 and some to do that. No, wait. $530 to do that. $5.30. And that will put us up here. Yeah, still not too far. This is something I'm going to have to think about. Now, if I go back up, I think that that's a little bit too close. I'm going to have to go back up to 1160 and 1180, which gives me my standard $1.25, and then I'm going to have to try to scrape my way out of there through some other trades. And one of the things that I can do is I can look over here on the put side with a bull put spread right here around 10 delta. And let's make that, let me bring this up here. Let's make that a 20 point spread also, 960. Excuse me, so that would give me $250. I'm going to hide positions here. I'm going to hide that one, and that would give me what would look like a iron condor right here, which isn't too bad. You know, if I'm looking at the standard deviation here, I could probably pull this put up, but we're talking 980. If I looked at a chart, 980 is here, which is below the recent run. So I could tighten that, I could tighten that up a little bit. Could I not? I could make this 9, let's make it 1,000. 1,000, let's, going the wrong way. Let's make it 1,000. And then this one would be 980. I could do that. That would give me $3.10 to help pay off this 805 here. And then I would end up with $500 loss. I don't like that either. So I'm going to end up waiting for the weekend, and we'll just see what happens over the weekend if this reverses and heads back down. If we were to look at the chart, I mean, you don't see this. Even on the negative side, you don't see this staying above this 80 line here like it's doing right now. So it's almost kind of unconventional right now. We're getting the same thing over here on a weekly. We're up way above, we're up at 33 here on the MACD on the weekly. And that hasn't been there for quite a while. And hardly even been there on the downside, even here. So it's pretty unbelievable, and I just got a feeling that it just can't maintain this. So I'm looking for movement back down again. Man, I hope. Oh boy. And the good thing is, you know, with the Russell, nobody's going to be like calling me out or putting anything to me or anything like that, because these are European style options, and you can only exercise them on the day that they expire or at expiration, and the deliverable is cash, so it's not like you get stuck with any stock or anything like that should that happen. But my friends, GLD is a little bit different. Let's take a look at that. So like I said, I'm just going to sit on the Russell, the RUT trade right now. So here we have gold. All right, so I have a covered call in this account on gold. So let's take a look at the Analyze tab and show all. All right, so, and I've had this for a very long time, but I have a 119 call. Okay, so let's look at the 119 that is in June, which I rolled this a while back because gold was moving up. So the 119 right now has a extrinsic value of $4.32, and it is currently $2 and something in the money. Well, I could roll this up and probably out if I were to do that. So if I analyze rolling the trade. So it looks like a calendar. Okay, so I had somebody say that was confusing to them. So let's say analyze closing this trade. So I'd have to buy it back for $6.40. And then I would go to September. And what do you think I should put it at? Let's go take a look at the spreadsheet here for GLD. Okay, so we need to get up to, we're at like 134 here. Yeah. We need to get up maybe like 122 or something like that. Let's go 122. Oh, that would give us really $5. Oh, no, I'm selling that. I'm sorry. 119. So let's go to 122 here in September. And we'll just sell that. Well, that's not too bad. That's not too bad at all. So if I buy back, okay, let's take a look at it this way. Analyze rolling trade, same thing, right? So our June, we're going to go to September, 122. And it says here it's going to cost, actually I'll get a credit of 42 cents. That seems almost unbelievable. I would certainly do that, and I may do that today. If I can get a credit of 42 cents and roll this up another $3 so that it's out of the money again. So if I enter this over here, if I say roll June 16, 119 to September 16, 122, and there would be one of them, and it says here that I would get a 45-cent credit. I like that. I think I need to put a date in here. Today is what, 3-5, and it'd be 122. So now, if I get called, oh, this is $45. There. So now if I get called, $42 now. Let's make it 42. Again, now if I get called, it'll be scratch. Basically, will not have lost anything. Total credit is now up to 968. I've reduced my cost basis a tad with this. So now I'm down to my cost basis is like, instead of paying $131 a share, I now looks like I paid $122 a share. And the stock's almost there. So we almost recovered our total loss here for the last, when did I do this? August of 2013, 14, 15, 16. We're almost into the third year, 2.5 years into this trade. And we're finally get our nose above the waterline here, sort of, almost. I might just do that. That's that would, to me, would be a pretty slick trade, and I think that this is a good time to do it. So I'm probably going to do that. It's up to 45 cents now. So I could just say create duplicate order. And that's September, rolling June. Oh, and that's June. What? Is that all I have is September? Wait a minute, that's way too far out. Isn't it? What do you guys think? Yeah, September's the next offer here. So we'd have to go actually 3 months. Add another 3 months to this. That's why there's a credit there. And then I could forget about it for a very long time. I don't know if I want to do that. I may have to wait until they offer some August ones that, may create a small debit, but at least, what if I rolled up? I want to get rid of these. Get rid of these two because they confuse me. I like it when it just automatically does the math for me here. What if I went to June? That would cost me $138. Not too bad. So if I went here to say minus 138, and we're working our way down. This would be, still would be in June. I don't mind that so much. I'm eating away at my credit steadily, but I'm getting back to almost a profitable position here. And that's the idea here, is to just keep it alive and going, because I don't want anybody to call me on this stock. So let's see what happens. This would be the trade I would probably do. So we're rolling in the same month up from a 119 to a 122 for a $135 debit. And that's okay with me. I wouldn't have a problem with that. Okay, so, but again, everything's waiting until Monday. How's the market doing here? Oh, it's up quite a bit now. Looking stronger. Don't understand why, but... So these are the two trades that I'll be looking at Monday, and then next week I'll come out with an update to let you know what I did or didn't do, or if I froze, or if I condorized the Russell. It just kind of all depends. And also, I have a simulated trade on Ford here. And Ford is now, this is April, and it's pretty deep in the money. So I think I'm going to work on a strategy to roll that as well. If we go over here, Ford's been doing pretty well, pretty happy with that. I could just say, you know what, call me. I earned 11% on this stock since last October. Simulated, unfortunately. But there's still dividends. They're still coming out with dividends, and, So what if I rolled this? Create, analyze, opposite trade. So if I buy it back, it's going to cost me $1.18. And if I go here, we're April. Let me hide this again. Say we go to June. could go to a June. I wouldn't do this today either, but we could go to a June. What am I doing here? 1375. Stock's at 1371. I could actually roll it to a June 1275 and get a credit. Yeah, because the difference here would be 20 cents or so. 15 cents. Or $15, I guess you could say. I don't know if I would do that or not. But I could. So, roll it to the next month at the same strike. Looking at a chart for forward. Looks like 14 is about the max we're going to see here. What's the high for the year is 1812 for the last 3 years. This 3-year chart. So the high is 1812. And the low is 1044. Alright, so I would say probably like 14 would be the safe thing to do, but I'm not going to do anything yet. Again, I have a feeling there's going to be a pullback next week because this is pretty unbelievable here. Even on Ford and just about everything else I looked at, the stochastic has not dropped below 50% for almost a month, and that is not really sustainable. So we'll see what happens over the weekend, but just to let you know what I'm thinking about. Alright, so thank you for watching, and if you're catching this today, have a great weekend. Otherwise, just in general, happy trading.